Hello, I'm Sami Zaidan. This is Counting the Cost on Al Jazeera, your look at the world of business and economics. This week, Cold War II, could the United States punish China for tightening its grip on Hong Kong by breaking the territory's peg to the dollar? Turkey's theatre of war, does the country on the verge of another currency shock have the money for conflict? And President Putin hoped to kickstart the economy this year, but how will he pay for his big plans amid low oil prices and the pandemic? Xi Jinping's China has put aside the niceties of economic power for a more aggressive posture to neighbors and liberal democracies. President Trump's America First policy triggered a trade war that morphed into a technological war. But China's security measures to rein in Hong Kong and human rights violations of Uighur Muslims have pushed the US to sanction Chinese officials responsible for the policy. And more sanctions could be on the way as a new bamboo curtain comes down. After 20 soldiers were killed in hand-to-hand combat in disputed territory in the Himalayas, India banned more than 50 Chinese apps, including TikTok. New Delhi accused Beijing of infringing on its national security by moving soldiers and artillery to the disputed territory in Ladakh. Well, that led to the worst conflict between the two nuclear neighbours in 60 years. Australian Prime Minister Scott Morrison's call for an investigation into the origins of the coronavirus prompted Beijing to slap tariffs and ban imports of Australian beef, abattoirs and barley. Morrison pushed further, offering to extend visas to Hong Kongers. And as Bloomberg first reported, Washington has considered going beyond sanctions and restricting Hong Kong's ability to use dollars, a move that would undermine Hong Kong's dollar peg and seriously damage the financial operations of the territory, if not China's access to dollars. Well, how plausible is that? Well, joining me now from London is Patrick Perrett-Green. Patrick is the head of global macroeconomic strategy at AdMacro. Good to have you with us. So first of all, do you think the Trump administration will actually push ahead with this threat to restrict access to dollars?
No, not yet. I think we're a long way off from that. I think it's more like targeted sanctions at the moment. So if you look at the Hong Kong Autonomy Act or all the bills that have gone through, it's about trying to cut off dollars to specific individuals or entities for now. But at the same time, even after the president's announcement of the past week, he has backed off from applying sanctions to certain individuals. So you have this a Congress that is very, very anti-China. And you have Trump that basically has had to go along and sign these bills because they were veto-proof, but he's very reluctant still to actually do anything that might upset the stock market ultimately.
And you think Congress will not be able to get its way? I mean, what happens, does any of that change when we get towards elections where you could have a new president in the White House? Well,
I think once we get if we do get a new president in the White House, then that becomes a distinct possibility. But it also depends on the trajectory of the relationship, and I think that's the other issue as well. And that's the most concerning thing, because it seems that we're on this sort of downhill slope where almost every week there's something that goes wrong or worsens the relations between the two countries.
In any case, do you see that China is already readying itself, shall we say, for this sort of development? Is it learning from Russia's experience?
No, I think we hear the rhetoric, but I think it's very different for China rather than Russia. Russia has many ways. It's not, if you compare Russia and China, Russia's not that big an economy. It can find lots of workarounds of dollars and stuff like that. It's not all Russia that's banned from dollars. But for China, given its role in international trade, the lack of exchangeability of the yuan, which basically even now only accounts for less than 2% of international foreign exchange transactions, I think China's saying it's preparing for it, but ultimately there's very little it could do about it. And I find it hard to see China being cut out of the dollar system. I think the economic consequences of that for the world, especially now, would be far too grave. So I think there has to be other pressure points rather than the wiping out of the currency access.
It would impose a huge cost to the world. Just bring it into perspective for us, though. What would it mean for Hong Kong, for Hong Kong's peg to the dollar? What's at stake here for the territory?
Well, I think for now, again, getting rid of the peg or applying the sort of restrictions on the Hong Kong dollar that we've talked about in terms of other currencies, I think it's far too early yet. But also, what we would see, we've already gone to one China, one system as far as Hong Kong is concerned. Most of Hong Kong's business is actually with China. And what we see is they have a situation where it would probably become more fixed to the yuan eventually. Obviously, it would be very disruptive, but I still find it very hard to see in the short to medium term, and by that I mean over the context of perhaps the next year.
We've seen President Xi taking a much harder stance on issues, whether it's Hong Kong, the Uyghur Muslims. Does this reflect some thinking that now it's time to focus perhaps a little more on the domestic economy rather than worrying too much about globalization? Are the priorities shifting, do you think?
Well, they have been for some time. You know, we had China 2025, which was all about building up the domestic production capability in higher end goods. And if anything, what's happened more recently is that move is being accelerated. We're seeing it with the pushing for Chinese chip makers as China's been cut out of a lot of US-based technology. And overall, yes, the focus clearly is on the domestic side. What we're seeing at the moment is a push on the old game of credit, infrastructure building, property development, in an attempt to sort of balance out the lack of foreign demand owing to the global recession.
As we see Chinese policy harden on some issues, we're also seeing in some countries politicians, calling on their companies to choose other nations for their production or supply chains. Is that serious? Could there be an economic backlash? Is China prepared for it?
Well, it is serious, without doubt, and we are seeing this gradual backing off of multinationals and moving. A lot of companies based in China are actually reducing their activities there, and they're looking to do production elsewhere. And for China itself, what can China do? China exports are still a significant part of the Chinese economy. It wants to trade with the rest of the world, but increasingly, and I think this is the thing, and it's being aggravated by the pandemic and the recession, is that you're getting much greater resistance to China's actions. And this is across, it's not just economics, obviously, it's security, South China Sea, and a growing alliance. And the relations, we talk about the Five Eyes, the European or the EU is still dragging its feet. But ultimately, China is being disassociated from the world, or is disassociating itself from the world. And that presents economic challenges for China.
Right. All right. Well, thank you so much for your thoughts on that, Patrick Perrett-Green. Turkey is active in 3 theatres of war. In Libya, alongside the UN-recognized government of national accord, it's managed to push back the advance of warlord Khalifa Haftar. After the loss of 33 soldiers, it inflicted heavy losses on Syrian forces and maintains a buffer zone in the country. And from time to time, it goes after Kurdish armed groups in Iraq. Well, this raises the question of how it's managing the costs amid currency challenges. Turkey's military expenditure increased by 86% over the past decade to reach $20 billion in 2019. As a percentage of GDP, it spends slightly more than many NATO nations. According to Fitch, Turkey's reserves fell to $33 billion at the end of June from $87 billion at the end of 2019. The central bank has been using reserves to prop up the lira. The lira hit a record low of 7.269 to the dollar in May, although it has made some strong gains since then. Turkish President Recep Tayyip Erdogan has been pushing for unconventional economic policies to suppress interest rates as inflation soars. Turkey is dependent on foreign money to grow the economy, and it's introduced bans on some US banks that are trying to short the stock market. Well, joining me now from London is Andreas Krieg. Andreas is an assistant professor at King's College London with the School of Security Department of Defence Studies. Good to have you with us. How easy, Andreas, is it right now on the economy to be fighting all of these war zones?
Not very easy. Turkey, as you rightly said, is under immense economic pressure following the COVID-19 crisis after kind of a 2019 and a prospect for 2020, which was relatively positive. Nonetheless, Turkey is obviously already bogged down in Iraq and in Syria, and now is engaging in Libya in quite an extensive way, in an expeditionary operation that is unprecedented in many ways. But what Turkey has been able to do over the last couple of years is revolutionize its way and style of warfare to engage in something that I would call surrogate warfare, where they're externalizing the burden of warfare as much as they can to local forces or to technology, which means there are very, very few boots on the ground, and it creates a relatively economical way of achieving objectives, economical both in terms of financial costs, which are minimized, but also political costs for Turkey, as very, very small indigenous Turkish boots on the ground will be fighting elsewhere. So we have militia groups, such we have, when we look at Libya, for example, the GNA being supported and their fighters being supported by Turkey, where you have directors on the ground that kind of direct these militias into battle. And overhead, you have obviously drones. Again, the drone program has been expansive in terms of its reach, as well as its use by Turkey across all these three theaters. And they are a very, very cheap option in terms of financial costs, but also in terms of operational risks for Turkey, because they can operate over a very vast amount of space. And integrating these two surrogates, the technological surrogates of drones, as well as the human surrogates of militia groups that they're integrating with also in Idlib and even in Iraq, has been a way for Turkey to basically achieve objectives on the ground while keeping costs to a minimum.
It's interesting that you mentioned drones there. Should a lot of the credit when it comes to technological advance be down to the drone program that Turkey has? And do you see that is what Turkey will perhaps continue to invest in going forward in terms of its military expenditure?
Yes, Turkey has built over the last couple of years an indigenous military complex that is far better than anybody expected. They're producing everything from maritime platforms to land platforms and obviously to high-tech platforms such as drones. And the drone program that Turkey has developed and the drone products that Turkey develops as well is so good in comparison that it is really on par with the capabilities that have been delivered by Israel or by the United States. But with the difference of Turkey no longer being able or needing to rely on US support or Western support to actually procure this kind of technology, no longer being dependent upon political risks, and they now can use it themselves.
Oh, that's an interesting development. On the other side, you've got Haftar and his allies. Haftar's had some setbacks lately. Has France in particular found itself kind of on the wrong side of the battle, joining the UAE/Egypt/Russia Haftar camp?
Look, the war in Libya is not over. I think the battles recently have been won by Turkey, and certainly the UAE and Egypt and also France had to accept some defeats, especially when it comes to Haftar. And I think Haftar is very much on the way out in Libya because he's proven to be an unreliable, impulsive actor that even the UAE cannot control. However, the war isn't over yet, and the spoils of war, as it stands at the moment, are really only supporting Eastern Libya, not Western Libya. And I think the Turks still have to make sure that this Western Libyan enclave that they have now liberated is somewhat sustainable, and it's economically not sustainable as it stands. So more territory needs to be acquired to actually achieve this split. And I think France is just backing the UAE's approach for very much ideological reasons. It's anti-Islamist, it's against civil society in Northern Africa. And in that respect, I think France is on the wrong side of history, but so far they still haven't been defeated yet.
What about Russia? Is it going to sit back and watch Haftar's recent battle defeats?
Now, again, Russia is a lot more flexible in Libya than the UAE or France are. Russia is a disruptive actor in the Middle East. They don't have any really clearly set out strategic objectives, apart from obviously trying to exploit American withdrawal, and that's what they're doing in Syria, that's what they're doing in Libya. They're playing a big power game, and they will go with whoever actor can support Russian interests in the end of the day. And if Haftar is no longer someone that they can or want to support, they might go for someone else. So they're not firmly on the East Libyan side. They have so far only supported the LNA and Haftar. But I think looking forward, I think the Russians are more flexible to actually strike a deal with Turkey on finding a solution for Libya that is sustainable, unlike Egypt, the UAE or France.
All right, some good analysis there. Thanks so much, Andres Krieg.
Thank you.
President Vladimir Putin is the longest-serving Russian leader since dictator Joseph Stalin. The former KGB colonel could potentially extend his two-decade rule until 2036. Well, despite his handling of the pandemic, Putin won overwhelming approval from the electorate for constitutional change. Putin insists he has not decided to run for 2 more 6-year terms. That's raised concerns, though, in many capitals. While President Trump has been keen to reduce America's presence overseas, Putin has been filling in the vacuums in the Middle East and Africa. But what of his economic record? Has he delivered for the Russian people? Well, take a look at this. We have 2 data points. GDP is the bar chart here, and the white line, that's for unemployment. Let's start before Putin took power in 2000. In 1998, that, as you can see, marked a low for the nation. The economy collapsed under President Yeltsin. But the real impact is felt in 1999, unemployment at 12.5%, and the economy just $195 billion. Well, Putin introduced economic reforms, and a boom in oil prices meant the country felt richer. Now, by 2008, unemployment halves and the economy shoots up to $1.6 trillion. That all came crashing down, though, with more than $400 billion wiped off the value of the economy after the North Atlantic financial crisis. Again, the impact is felt a year later in 2009, with unemployment now at 8% and the economy worth $1.2 trillion. The annexation of the Crimea and conflict in eastern Ukraine saw sanctions cripple the economy. After rising in value to $2.2 trillion, the economy shrinks to $1.2 trillion. Now, at the end of 2018, the economy is becoming more resilient to sanctions. It's worth almost $1.7 trillion and unemployment at a respectable 4.8%. But the economy has been stagnant of late. So what can we expect from President Putin over the next 15 years? Well, joining us via Skype from London is Dara McDowell. He's head of Europe Risk Insight and principal Russia analyst. Good to have you with us. Why has Putin been so successful in hanging on to power for so long?
Well, one of the main reasons is simply that he's been very good at ensuring there is no alternative to him. Part of this is due to the weakness of Russian institutions, particularly the lack of a kind of tried and trusted mechanism for the transfer of power to a designated successor, but equally his control over the political landscape and his fairly ruthless prevention of any alternative president or leadership figure from emerging in the ranks of the opposition, either the street opposition or the technical opposition within the Duma.
All right, so he's firmly in political control. The economy is adjusting to sanctions. What does that mean for Europe and the United States? How do they deal with Putin now?
Well, essentially the same way they've been dealing with him for the past 10 years or so, or particularly since the invasion of Crimea and Ukraine. It's very clear that there are some very almost irreconcilable differences between Russia and the West on key issues. Again, Ukraine is one of the biggest of those. But so far, what we've seen is a mixture of confrontation at key moments, of punishment for actions such as the Skripal poisoning, or where other incidents where Europe and America seem to think that Russia has gone too far in one direction, alongside, exploring opportunities for collaboration on a pragmatic basis, particularly economically, when it comes to things like supply of oil and gas to Europe. We're seeing the potential completion of NS2 next year. But it's going to be a continuation of this kind of this acceptance that Putin is a fact of life, that he's not going to leave the leadership of Russia anytime soon, and that the West needs to take a balance between confronting him when they feel necessary and engaging where they can.
And amidst all of that, he's been quite successful in taking what was an economy the size of Belgium's to now the 11th largest in the world. How has he managed to grow the economy despite all the crises and sanctions you mentioned?
Well, it's important to note that at the start of his term in 1999, or the start when he first came to power, Russia was at a particularly low point due to the Soviet collapse and the 1998 financial crisis. And Putin benefited very much from a rapid increase in global oil prices, which kind of flooded the Russian state coffers, as well as a great deal of excess or fallow Soviet industrial capacity, which we quickly brought back online to grow GDP rapidly. What we've seen since really 2012 is that this economic model has exhausted itself. And Russia's growth has been quite stagnant, around the 1.5% to 2% rate, punctuated by intermittent crises such as the 2014 oil crash and now 2020 with the pandemic. So what you've seen over the past decade is actually living standards for ordinary Russians have generally stagnated or even gone a little bit backwards. And Putin cannot rely on the economic success narrative as much as he used to. The easy gains of the early 2000s.
I guess if I could jump in, he'll claim even stagnation is a success given the crises, given the economic sanctions, right?
Well, if you look at the sanctions and how they've been applied, they have been primarily focused on the energy industry or key individuals around the political leadership. And while these are certainly somewhat constraints on growth, the bigger issue is commodity dependency and also the lack of key reforms in areas such as the rule of law and property rights. Frankly speaking, when you have such huge problems with corruption, it's very difficult to get people to invest, particularly Russians. If you're a Russian entrepreneur and you know that you can't necessarily look to the agencies of the state and the law enforcement to protect your business.
You're going to be worried about investing.
Property.
Yeah. Just very briefly, in 60 seconds, he had planned these massive infrastructure investment projects. Will he still be able to go ahead with them?
It doesn't look like it. Mikhail Mishustin, the prime minister, announced yesterday that the national project spending would be delayed from 2024 to 2030. Which really does show you the scale of the fiscal pressures that Russia is going to be under as a result of the pandemic and the oil price crash.
And what would a Biden victory finally mean for Putin and Russia, do you think?
Well, there are two sides of this. First off, there are certainly very bitter memories within the Democratic Party in the U.S. over 2016. And a generally more hawkish stance towards Moscow in the party as a whole. That being said, it looks like if Joe Biden wins, he's going to be taking office in the midst of a very unsettled economic position, as well as an ongoing pandemic. So whether or not he's going to have the bandwidth to really put into a program of confrontation with Russia, or whether he'll be more focused on domestic issues isn't clear. What we will see is an increase in multilateral cooperation with Europe to impose sanctions when the West feels them necessary. And that'll make those sanctions more effective if somewhat more targeted.
All right, Darren McDowell, thanks for your insight.
Thank you.
And that's our show for this week. Remember, you can get in touch with us, though, via Twitter. Use the hashtag AJCTC when you do, or drop us an email. countingthecost@aljazeera.net is our address. There's more for you online at aljazeera.com/CTC. That'll take you straight to our page, which has individual reports, links, and entire episodes for you to catch up on. That's it for this edition of Counting the Cost. I'm Sami Zaidan from the whole team here. Thanks for joining us. The news on Al Jazeera is next.